It's Sunday, and that's Q&A day, and this one is going to be fun. I'm even excited. I've been excited working on this since yesterday afternoon. A whole bunch of very, very interesting questions popped up this week. And make sure I got audio, which is always a good sign. But this one's called Financial Jiu-Jitsu. It's a topic I've been talking about for a long time, but this encapsulates many different flavors of it. And yes, when I was a kid, I did judo and karate. I tried jiu-jitsu, but I was too old by that stage in my 50s. I just popped too many elbows and things. But there is a financial jiu-jitsu of investing as well. We'll talk about that today. And shout out to anybody who is from Brazil while we are here, and everybody, the mods and everybody for coming. I'll try to keep up with the chat while I deliver this at the same time, juggling many, many different balls. So let's jump in. And this one is called Financial Jiu-Jitsu. This is not financial advice. I'm just a guy on the internet, and all the questions come from Patreon. And these questions typically encapsulate the top burning issues of the week. Burning concerns, burning issues, looking for solutions to certain problems. And I love doing these questions because every single week they make me think and they make me smarter. I'll also showcase probably the only podcast I listen to. People always ask me, what do you listen to, etc. So I'll showcase that today as well. Let's get into it. And thank you all for coming. First question. This is from Ali 2023. Last post was 5 months ago. Would you consider any kind of education structure for folks wanting to maximize finance investing skills and capacity? I mean, something that can beat the top business schools, quality outcomes, master in financing investing with real life stuff and practices, utilizing the hundreds of contents you already developed with extra on concepts. So great question. I share a master's in finance course pretty much every single day, 5 to 10 posts that are very important for building a solid financial future. And I've made tens of thousands of posts in the last 4.5 years, tens of thousands of posts, maybe more even, across Patreon, all the heavy stuff, all the heavy models, etc., all on Patreon, Discord, across all the topics that everybody should be interested in. And so, yeah, I think I do that already. I will not be giving courses. I don't have time for that. I can do things better at scale this way. And today's one of the 5 or 6 posts so far today, is the CAGR refresher comparing Bitcoin, gold, and S&P 500, but really just emphasizing the importance of compound annual growth rate. And a quick glimpse of this. If you put $100 13 years ago into Bitcoin, gold, or the S&P 500, you'd have $2.1 million worth of Bitcoin. You would have $213 worth of gold. So gold basically doubled. And the S&P 500, 436. So you can see what's really interesting, because people think gold is the best thing ever. No, it's not. It sucks. All right. Yes, it had a very good last 12 months. But other than that, it is not a fast horse. S&P 500 smoked gold more than 2x the return. But of course, you can always pull a segment of time, but that was an example of today. CAGR. Never forget that. So important. Next question from MattF. The new rotation model looks amazing. Well done to you and team. I'm very interested but worried that my chosen stocks could be too closely correlated and how they may work in a potential 2026 bear market. Your thoughts would be very helpful. Ignoring crypto, I have UK stocks and shares tax-free with an allocation of Tesla 70%, Strategy, which is Microstrategy, 25%, and Coinbase 5%. For the rotation model, I would like to add NVDA, and in time, maybe Microsoft, Meta, IBIT, if the UK government ever allows it. Oh, the UK. It's shocking the way sometimes people are forbidden from investing in certain things like IBIT. And I would be reluctant to rotate more than a third of my Tesla. Huge thank you to you and team. Thank you, Matt. Let's look at this. Yes, indeed, we can. It's a cool meme. It's a guy who does yep, and that's what I like to do too. So I think it's funny. So I did configure your selections and settings. First of all, they could work quite well. I would skip IBIT because you already have MicroStrategy. Okay, so you already have a Bitcoin proxy in there. But Meta is better than Microsoft. We'll talk more about the Mag 7s later as well. And here are some rough outline projections. In fact, per the model, Meta is expected to get to $1,100 over the next 2 years. That's interesting. Tesla, 742 at least. And you can see all the other stuff there. It's funny because Coinbase actually IPO'd at 420. I remember that number specifically. Now its target is for 2 years from now about 477. Anyway, let's talk about bear market prep. There's a couple of things you need to do. Sorry about that little graphic being a little bit. You need to modify your targets. You need to modify your retention levels down for the bear market assets. You don't want to probably be holding a lot of MicroStrategy if there is a bear market. By the way, I've been talking for at least 18 months about the fact that there could possibly be no traditional Bitcoin bear market because of the perpetual bid coming in from treasuries, sovereigns, pensions, IBIT, you name it. 401ks are coming. That could keep us from a big drawdown. So you're not going to get your 75% off, 80% off drawdown in the past. It might, depending on market situations, we might go back 30% or whatever. The rule of thumb is if you go to 150K, you might fall back to 100K. Who knows? Right now we're at $105,200 alive. So bear that in mind too. We have to watch this stuff very carefully. I say when investing, always keep your head out the window, watch what's going on, and we'll be on top of whether or not a bear market is coming. But if we do see one coming, you want to ratchet down your MicroStrategy load and pivot for AI market assets. That's going to be so important. And of course, the model does that for you. And these are your results, Matt F. I assumed you had a $50,000 bag to start with, and I actually plugged in all your assets. And in 2 years, if history repeats and these assets do what I think they're going to do and do what the model predicts they're going to do, instead of hodling, your 55K would go to 247K dollars, not British pounds, which would be a 351.7% return just by holding. Again, you're in very disruptive assets, which may not happen. It depends on exactly where these things go. But I think the next 2 years are going to be quite explosive for AI. And so does the model. And if you rotate between these very disruptive, very volatile, very high Sortino assets, your return could turn 55K into 662K or 1,100% versus 351 for hodling. So that's where we are. And Mopbot has the new record. We're digging into how she got this. Again, this could be going back 3 or 4 years with extremely volatile assets, but it shows you hodling can take $500,000 portfolio to 2.6 million, or a crazy number indeed. So we'll dig more into that at another time in the future. And this is from Swing Trader. Can the new rotation model be used standalone tool, or do you have to use other IA tools? Well, the simple answer to this is it is designed to be used standalone. But you can also enhance it by using things like optimized trend for determining if things are turning around or not, which the model actually does automatically, or ATR levels for identifying support levels, just to give you added level of comfort. So I hope that helps. Next question is from, and we're going fast because there's a lot of questions and some tricky ones too. But this one is very special because I love when two things happen. When either there's new females coming into investing, and a shout out to Mopbots again. She's driven a huge amount of new ladies to trading and investing, which is wonderful. Also, I love when young people are in. We have people in the community that are 17 years of age, and we've got people in their 80s. And this is from Ponte. I'm approaching 80, and your 747 IA rotation model is way too complicated for my level of experience. Well, kudos to you. It's very important to know. And a lot of people don't admit when they can't fly a plane or ride a motorcycle, etc. So that's very, very good that you are self-aware. It is a complex beast. But I hold MicroStrategy and Tesla in an IRA from which I must pull an annual RMD. Is there a simple way I can pair trade these assets? I'd be happy with a level of return greater than straight hodl, as I must sell, withdraw up to 10% annually over the next decade. Many thanks for introducing me to Bitcoin, MicroStrategy, and Tesla. Woohoo! Great bags, great holdings, great returns. But beware, as I say in the previous to previous session, We don't know what type of bear market's coming, but we do know AI is coming. I'll talk more about that later. You need to start positioning yourself. So the easy way for this would be, and I watch, by the way, MicroStrategy and Tesla like a hawk. Okay. And you know why I watch those two like a hawk, literally all day long, every day when the markets are open, even after hours, before pre-market, all that type of stuff. I watch these two like a hawk. And because I share all my moves, you can just follow my rotation alerts and you can easily swap and you get to your quota as well at prime opportunities. And again, congratulations for trading so well. Watch this space. JDXX, quick questions. I've recently in the news seen that MicroStrategy has a lawsuit against it. Is this a cause for concern? Will this affect the share price and the future of MicroStrategy? And what is the likelihood of this being successful? Okay, I'm going to step out for this one because a lot of people, sometimes they're new to stocks and investing. If ever there was a time when a class action lawsuit prevented me from jumping on a very disruptive asset, I'd probably still be living in a shoebox, in a cardboard box on the street or whatever. Okay. There's law firms that do nothing else than sit and plan as to how they can gouge money from corporations. Okay. They don't even work with shareholders in some cases. They find shareholders to attack corporations, to fill their bags because the law business isn't so good. And if you're in a very corrupt state, it can be extremely lucrative to be a law firm and just go after corporations. I will spend quite a bit of time on this because it's very personal to me. Very personal. We'll get into that story too in a second. So let's talk about this. But the big point is, don't let this put you off investing in an asset ever. A lot of people freak out. I'll explain why you shouldn't. First of all, frivolous lawsuits are everywhere, okay? And a class action CA, not California, a class action lawsuit can be quite scary and terrifying, but at the same time, you got to understand what's behind it. Again, financial impacts, lawsuits can lead to fines, settlements, legal fees. It may cause a strain on a company's finances like MicroStrategy. And if the lawsuit targets, for example, their Bitcoin holdings, it could create a little bit of worry about their core business, especially since MicroStrategy has positioned himself as a Bitcoin proxy for investors. That's all they are. They're a Bitcoin company. Forget the software business. It can also lead to reputational damage. Legal battles can erode investor confidence, especially if they involve high-profile issues like executive compensation or governance. Also, it can drive some regulatory scrutiny, which you don't want either. If people come over from the SEC knocking on the door, it could impose stricter oversight, which could impact operations and activities. However, MicroStrategy core business is Bitcoin strategy, and it has been resilient, and lawsuits are common for public companies, and not all lawsuits lead to any damage whatsoever, okay? And the concern level depends on the scale, potential penalties, and how it could infect their Bitcoin treasury. So going to spend a bit of time on this. Now, in my opinion, I think it's a dumb suit, okay? The lawsuit seems to be people complaining that MicroStrategy understated how much it could lose if Bitcoin went down. I mean, if you have a calculator and a couple of brain cells, you'll understand that. But if you're buying a company that is self-labeled as a leveraged trade on Bitcoin, what the heck do you expect, ladies and gentlemen? It's pretty clear what will happen if Bitcoin goes to zero, all right? But remember, there are corrupt judges, corrupt states, corrupt judges again, I'll say that twice, corrupt law firms, and they're only out for a buck, okay? Sometimes they even hunt out shareholders. Shout out as well. Top VC, this is Bill Gurley. All CEOs, CFOs, okay, and board members in Delaware Incorporated companies must read this research from Stanford's Joe Grunfest. Joe is the #1 voice on corporate governance, and something is awry in Delaware, and you should know the risks. Okay, any organization in Delaware, hey, Doc Intern, thanks for coming here. Any corporation in Delaware needs to get out because the judges are corrupt. The law firms that feast on these opportunities are corrupt, all right? And this is, by the way, shout out to Bill Gurley and, of course, Brad Kirshner. And I just want to say, I don't watch many podcasts, but if I do, it's these two, okay? They are the best. You know, I used to like All In Pod back in the day, but the real alpha, far better than the All In Pod, is these two. So keep up the great work, you guys. Excellent. Now, let's get back to scam lawsuits, all right? A refresher on this one and why literally Tesla ran for the hills, okay? And a shout out to Tesla Boomer Mama, who helped all the retail investors understand what this was all about and helped him get his comp package back. But a corrupt judge with three corrupt law firms found a shareholder with 9 shares. 9 shares. This shareholder, I think, had more than Ross Gerbil and Barry Glack combined. I'll leave that aside. But 9 shares, come on. They had to hunt out somebody where they could find a way to go and fund an action against Elon Musk and Tesla. Okay? Over a comp package. He hasn't been paid in 7 years, everybody. 7 years. 0 pay. Okay? Anyway, this is the type of crazy stuff. The law firms alone stand to gain, not the person they coerced with 9 shares. All right? So important. Anyway, Tesla off to Texas, where they can get themselves protected from radical, woke judges who are just everything bad. And again, listen to these guys. Warning, get out of Delaware. Get out. If you have a corporation there, get out. Get out. And that's the situation. So don't worry about these lawsuits. Okay? They happen all the time. Every single company I've ever invested in has had one class action suit or another. And typically, like literally, if the price goes down of a stock, that's when you see all these class action lawsuits pop up every time. And go back in history. Check MicroStrategy during the last bear market. Check out all the lawsuits. Again, if you are invested in MicroStrategy and you don't understand what Bitcoin is or what their strategy is, you should not be invested in MicroStrategy. All right? Boom. Leave it there. Again, frivolous. Hate that word. Be careful of that stuff. Next question. It's been a while since I've seen Jay Pagan. Last post was 4 months ago. So I'm trying to, the people that haven't been active for a while, I'm pulling their questions. The new thing I'm trying. I have to make sure every voice gets heard. Hey, James and team. Love and appreciate you guys. Love you too. The things I'm hearing about China's BYD car company seems to be a competition concern for Tesla. Not in the US yet. Knowing that Tesla is much more than a car company, in this specific car industry, and according to your research, do you see the strong rise of BYD as a valid threat to Tesla car segment? And do you have any shares? If not, have you been looking into BYD stock? So, I will also spend some time on this because this is an important one. All I heard for 10 years in Tesla. Oh, the competition's coming. Yeah, they're going to beat Tesla. Oh, BMW is getting into the market. Volkswagen crushing. All that nonsense. It's the same deal over and over again. But I will. This is a great question because I get this all the time. And I've shared, by the way, pictures of, I'm going to take a picture put it on Twitter later, the undercarriage of a BYD car after 4 years. And I'm going to take a picture of my nearly 7-year-old Model X undercarriage. And you can look at the difference yourself. The BYD is all rusted out, not going to last, okay? They hammer them together with labor. The handling is poor. The quality is poor. Yes, they're cheap, but, they're not a Tesla. Tesla's in the luxury segment. These guys make cars for sometimes under $10,000. And by the way, they just had to cut prices for their cars by 30% because EVs aren't selling. And this takes me to my next point. This is my brutal vision for the future. And one thing I'm very good at, I don't want to toot my own horn, But one thing I can do is I can put pieces together in my head and I can forecast the future pretty well. And that is a key skill when investing. This is my brutal vision for the future. And it not only impacts EV makers, but it also impacts ICE car companies. Okay. So be warned. And I don't own any BYD. Never have. All right. First of all, there's going to be hyper competitive dynamics out there. And a good way of thinking about this is you've heard me talk about Bitcoin mining and how it's cutthroat. Since the beginning of time, I've said the same thing. Now, EVs are in that same parallel universe. Intense competition, cutthroat, participants investing heavily, in mining rigs for Bitcoin, factories for EVs, selling them at a loss, flooding the market, crashing the prices, okay? It's a race to the bottom. Miners, again, they're cutting each other's throats, and the hash rate goes up, raising energy costs, etc., and hardware, etc. It's just a race to the bottom. And the EVs are in the exact same situation, okay? EV makers cut prices to gain market share, eroding profitability. Now, there will be market consolidation. As I say, the winner takes most, all right? Only the most efficient or scale players will survive in Bitcoin mining, and the same thing for EV makers, okay? Only the fittest will survive that can make a profit, that can generate free cash flow will survive, all right? ICE is toast. Anybody that makes as SMR says, a petrol car, gas car, diesel car with a tiny little battery inside of it is dead. Hybrids are stupid. Said that for years as well. ICE car companies are facing absolute obsolescence way faster than I expected. Wait till you see at the end of 2025 the ICE car results. It's going to be stunning. These companies are going to bleed out way faster than we expected. Way faster. Just like outdated mining rigs become obsolescent. Okay? Same thing. Exact same thing. And it's a low margin trap. EVs, the risk becoming a commodity with brutal competition is there. Okay? Again, akin to diminished returns in Bitcoin mining. So that's the first thing. It is ugly. The second thing, a year or so ago, people didn't understand why Elon Musk decided to make a hard pivot to all things autonomy, and probably put his team under the most incredible pressure and was not taking any prisoners. He said it has to happen by a certain date, okay? 12th of June. They're launching their Robotaxi. And people say, oh, but Waymo already have one. No, they don't. That's a magic trick. It's not real autonomy. It's not AI, okay? It's maps with a car with a truckload of radar and LiDAR. It's a magic trick. It's not real self-driving vehicles, okay? It's like me giving you a stick and a blindfold and having you walk around a room in the dark, okay? That's what they do. The stick is the LiDAR and the radar. Sorry for my very crude analogies today, but I got to get this message across. And sometimes my analogies are very crude, so I apologize for that too. But him pivoting, Musk is a genius, him pivoting to autonomy, okay, making sure there's no steering wheel or pedals in the cars. I'll show you some pictures I took at the Robotaxi event as well, is escaping the low margin EV bloodbath that's coming. And he's pivoting to a very high margin opportunity. We'll talk about retiring on Robotaxis in a minute too. Autonomy enables software-driven revenue. Okay, the Robotaxi service, far more profitable than hardware sales. You buy one car they make it for $15,000, they'll sell it maybe for $25,000 or $30,000. That thing can make $50,000 a year. The laws of economics have just been turned on their heads. How can you make something so cheap and make so much money on it? It's infinite ROI, which again is very hard for humans to understand. Take your time. Imagine investing $30,000 and making $50,000 a year in it. How many of those puppies you want to buy? The answer is all of them, real quick. Charles Kim, thank you as well for coming. So again, this is so important because this is coming and this is happening, and you need to be aware. Even if you hate Elon Musk, even if you hate Tesla, whatever, I don't care. You got to know. Phase one, again, Tesla will dominate mobility as a service markets. They can scale like no other. They can spit out in 4 hours. In 4 hours, they can make more self-driving vehicles than Waymo has on the road today in just 4 hours. It'll take Waymo years to double their fleet. That's phase one. They will dominate. They will dominate scale, the ability to manufacture. The machine that makes the machine is the magic. And phase two, humanoid robots, which run off the same technology, leveraging AI and robotics expertise. The car is a robot on wheels driven by AI. And Musk will lead this transformative, high-margin industry. Everybody says that, not just me. Jensen Huang, CEO of NVIDIA, the guy who's been banging the table since 2021 about AI. Nobody listened to him. Took me until summer 2022 to listen to him, but better late than never. And summer 2022 was not a late time to buy NVIDIA. But he's full on. He's like, okay, Elon Musk. Same thing. The Google CEO that owned Waymo, same thing. Watch Elon Musk, you know? The Waymo CEO, by the way, is hilarious. Check out her video. Freaking hilarious. Anyhow, the future focused is really literally forget ICE. ICE is dead. It's all autonomy. It's all humanoid. Forget cars. It's all autonomy. It's all robots. Okay? That's all you need to know. Now, there will be a second question that ties back into this, but we'll get to that in a second. Now, this ties back into this directly, and the subsequent question too. And it ties into MicroStrategy as well. Everything is like, I love when all the questions tied together because it means you're thinking the right way. And I always talk about connective tissue. Everything is connected. Make sure you understand that connective tissue. But in a recent video, Apple or Google was slated for buying back their own stocks. Yeah, that was me. I slated them. I'll explain why in a minute. How is Strategy B, which is MicroStrategy, any different? Using all sorts of financial jiu-jitsu to buy as much Bitcoin as they can while diluting their stock. Eventually, all these investors chasing the safe yields, not needing to pay out from somewhere else. And Saylor says he'll never sell Bitcoin. I can see a day where the system breaks. What can take MicroStrategy to zero, hypothetically, of course, and what's the worst that can happen, etc. Bitcoin back to 30,000, for example, would that look okay? So good questions. First of all, I will talk about stock buybacks, and I'm going to use Apple as a case in point. Apple Car, fail, complete flop. And they put a lot of resources into this and got nowhere. Apple Goggles, fail. The day they launched, I made a video mocking Apple Goggles. I said, nobody's going to use this thing. It's crap. And nobody can afford it at over $3,000 a pop. Fail, okay? The two things that they tried, they failed. Instead, they bring you a new color for the Apple iPhone. That's the innovation. Now, the difference is, this is so important, and for people to understand the difference between stock buybacks and MicroStrategy selling shares to buy Bitcoin. So with Apple, the direction of shares, the stock buyback reduces the shares, which concentrates ownership, okay? The increase of shares, the opposite, new issuance, dilution of ownership from MicroStrategy. Use of funds, they spend cash to return value to shareholders. They don't read, they just buy the shares back, which makes the supply less, which drives the price up, which is their version of returning cash to shareholders. MicroStrategy raised cash to invest in Bitcoin as a bet on Bitcoin going up, okay? Same thing since August 2020. Again, my third ever video is about MicroStrategy, before anybody even knew what it was. Impact on shareholders. Buybacks boost earnings per share and stock price, benefiting shareholders. And dilution for MicroStrategy ties shareholder returns to Bitcoin returns, okay? They have share accretion. If they sell a share for $2, okay, they can buy sometimes nearly $4 worth of Bitcoin with that on a relative basis because of the premium, the NAV premium. And risk profile, conservative, they use excess cash to enhance earnings per share, i.e. shareholder value. And MicroStrategy bet on Bitcoin's future, increasing financial risk. It is riskier, of course. And market signal, this is important. Apple when they don't know what to do with all the cash they have, and after failing with the goggles and with the car, it's like, well, we got all this cash and our iPhone business is really good. Let's just buy our stock back, because they got no confidence in their ability to invest in their own business. That for me is a kiss of death. That's why I sold my Apple years ago. I think in 2021 or 2022, because I saw it's like they got no innovation anymore. You know, like when Steve Jobs was there, oh my God, that was a different era. But the other guy who's in charge now is just kind of like managing the morgue almost. And Microstrategy signals confidence in Bitcoin. That's the signal. They believe Bitcoin's going to go up. And I've seen nothing but Michael Saylor's smile since November 2024. He knows what's coming. He has inside baseball knowledge of exactly what's going down. Now, this is an important aspect too. I shared a video in this 3 days ago, and people probably didn't understand it, but I'll walk through it again. I call it Microstrategy Financial Jiu-Jitsu, Saylor's savage capital market checkmate. So he has weaponized his Bitcoin holdings to raise money without ever needing to rely on the market price of his regular stock. If the stock goes down, no problem. He can raise capital from preferred stock, the STRK, the STRF, whatever else he's coming out with. He can issue debt. And if the shorts drive it down real low, like to zero, he said he can issue preferred and use their mistake to buy his stock cheap and drive the price back up. So it's kind of like a damned if you do, damned if you don't. You can't beat this guy. Yes, if Bitcoin goes to $30,000, well, to be honest, if Bitcoin goes to $60,000, people like me will be buying it all up, okay? So we know where it's going now. And I've never been more bullish on Bitcoin in my entire life as I have right now, this time. It's crazy because the money's coming in and the thing is so scarce. Absolutely so scarce. Anyway, that's his jiu-jitsu checkmate on the capital markets. And a quick reminder too, MicroStrategy versus Apple and Google over the last 12 months. Here we are. Apple up 15% over the last year. Google down 6% over the last year. Okay, let's compare it to some other puppies here. MicroStrategy up 143%. Remember, MicroStrategy is up 3,000% since it began this strategy. And I've been riding that train since the beginning. Tesla's up 58% over the last year. NVIDIA, 21%. And the reason I have big green check marks is those three things make up 80% of my portfolio. Okay? Those three things. That's why I watch them like a hawk. They're very important. And you can see how I'm positioning myself. Yes, I still own Solana. And yes, I have a little bit of spot Bitcoin, but I much prefer trading equities with options and leverage. That's kind of my thing. Much easier. So I hope that makes it pretty clear of what they can do. Now, if the Bitcoin price goes to 30,000, they're still going to be okay because they don't have to sell any Bitcoin to repay their debt. It can't be called upon, which is also more jiu-jitsu magic. So don't worry. It's going to be fine. Anyway. Next question. Peaceful Warrior in Australia. Wondering if you could do a retire-on model for Robotaxis, please. I'm in Australia, however, would be interested in seeing what your projections for free cash flow would be and how you could manage a small fleet of 2 to 5 cars and what elements you think you need to be actively managed to run this business, i.e. hours per week. Could this be a side business for a busy professional? What would you reinvest back into the business to expand the fleet, buy more shares, etc.? Thanks and cheers for everything. So this one is hard to estimate because we don't know many different factors, okay? I don't know where you live. I don't know how busy the city is. I don't know how much people use rideshare. I don't know how many other people are going to follow you. But if you are, say, in Melbourne and you are first to market, you probably could make a very good living. Or if you're in a city that has maybe more rural, but has a lot of, say, elderly people that need to get around, you could make a killing there too. Find your niche. Make sure there is demand. Like Austin, Texas can support 2,000 Ubers a day or 5,000 Ubers or 1,000 Waymos or whatever the numbers are. I don't know. But make sure you understand that and you can undercut the competition. And that tells you where you can go. Now, I don't have all the data. I don't know how much you need to live. I don't know how much time you have. I don't know how much capital you have to invest. But I will share this and I will build, I promise, a retire on Robotaxis. and retire humanoids when I have all the data to make a very, very proper model. First of all, Cybercab Robotaxi event. These are pictures from there. I love the Cybercab from behind. I think it's spectacular. And if you see the size of the trunk, it's ginormous. And I like the way the doors open up. And there's Kathy Wood in the top right. She photobombed my image, which is kind of hilarious. But it was great to be there at that event. And this car is very comfortable, very safe feeling. It doesn't even feel like a car. It feels more like a spaceship or something. Anyway, you will need, assuming the Robotaxi will cost $30,000 US. I converted this to Australian dollars for you. You can create probably a net annual income per Robotaxi of $30,000 if you can do some yourself. I was watching this video with Farzad about a guy that actually, for the last 12, 13 years, he's been doing ride shares. Super, super smart guy. All he does is drive Ubers, but he's built kind of like a channel around advice for Uber drivers. It's very interesting to listen to. And he does work himself, like has to clean up messes made by passengers. I won't get more detail than that. But of course, the Robotaxi, you'll be able to have the user's credit card number, their reputation, just like any other application. So they're not going to go mess up your car and ding their own rating, because that'll prevent them from ever using one again. But you have to put skin in the game, clean the car yourself, manage it, wipe it down, etc. I doubt if you're in Australia, they're going to have the robotic cleaners. That'll be more for big fleet managers. But if you're willing to roll up your sleeves, maybe you work at an office, you could have the Robotaxis come back to your office, charge at lunchtime, you do a little wipe down with some Windex or whatever. Possible. Anyway, let's assume $1 Australian dollar, 67 cents, 60,000 US dollars is enough to live on per year. You would be able to get away with 1.34 Robotaxis to support your life, just with 1.34. So rounding that up to 2 Robotaxis, and these are very broad brushstrokes as well. Again, assuming you have a market where there's demand, you could make 60,000, which would be approximately 90,000 Australian dollars a year. And the savings from this business, you reinvest and you get a 3rd Robotaxi and then a 4th and a 5th, reinvest all the money. And once you get to 5, you'll be able to give up your day job, maybe even way before that, depending on how much your burn is per month. So that's what I would do. But I do want to stress one more thing too. And a shout out to Søren Basher, chatting with him this morning. He put this incredible chart together, which blew me away. And I kind of thought about some of this stuff, but not all of it. In fairness, I always talked about how I don't take short-haul flights anymore. I hate flying. I hate airports. I hate planes. I hate sharing spaces with other people. I hope that doesn't come out bad. But literally, it's a 500-mile flight or less, I will never do again as long as I live. Okay? I drive. I mean, the car drives. 500 miles, no problem. No problem. Very easy. Sit back, watch YouTube, whatever. But the first order effects of robotaxis are huge, and people need to understand this because this is now becoming very real. Undercut, it'll destroy rideshare. Uber is dead. Once these things scale and get across multiple cities, the only place where Uber will exist is where Robotaxi is not, okay? But we'll be able to watch this play out in real time in Austin, Texas, how quickly they can scale and how quickly they can copy and paste into other cities. And then, okay, the CERN covered a whole bunch of things. People that have to pay very high insurance because they got bad insurance record, or they got bad credit, they got to pay very, very high financing fees, 19, 20% for their car, on top of very expensive multi-$1,000 a year insurance. They're never going to drive again. They're never going to own a car. They're going to use these things to get everywhere. Okay, it'll be far cheaper. And that will create a lot of stimulus. And basically every car, and I've said this many times, is going to be like buying a dumb phone. Any car that doesn't have FSD will not be sold. Okay? And you get your time back. When I am driving a 500-mile drive, I work at the same time. Or I jump on a Twitter Spaces with Marty or whatever. It's super easy. But the second order effects are incredible. The OEMs, the people that make gas cars, ICE vehicles, are destroyed. Done. Insurance industry, destroyed. Okay? Tesla does insurance for a reason. There'll be so many lives saved, it will be crazy. Sometimes if you don't drive one of these cars, you're going to be penalized, probably, I believe, in the future. And ICE vehicles will be taken off the road. And petrol stations, gas stations will be destroyed. You might have to drive 20 miles to get to one in the future because there will be none, and there'll be no reason for it. And parking structures will also be destroyed because if you're going to a city, you'll take one of these things. Pick up, drop off, no need for parking anymore. No parking tickets. Imagine that. Woohoo. And third order, real estate opportunities. Airlines will be impacted. Hotels will be impacted. Healthcare costs could come down from cleaner air. And so much more. Productivity booster. People have more time. And I believe, and per my calculations, the GDP per capita in the United States could go up by at least 2% from people getting their time back and reinvesting that time instead of driving. I know people that still commute 2 hours a day in a car. What a waste of time. But they have to do it to go to their work because they have a house they could afford with their family that's in a good area with schools. So they got to drive 1 hour each way. And that's also very stressful. So if you are doing those big commutes, get a car that drives itself. Do yourself a favor. Next question. Oh, I just want to wrap up. I'm going too fast here. The change that's coming is absolutely bonkers. And it's coming fast. Fast. Just watch this space. There's no hyperbole here. Next 2 to 3 years, we'll see radical changes in many, many different areas, all driven by AI and autonomy. Watch. Next question. Stubbles. G'day, James. Could you please provide your analysis on Solana's percentage of failed transactions compared to other major players? Research I've done suggests it's between 40 to 75%. I understand the percentage could be related to people who don't know how to transact, but I would expect that to be somewhat true across most cryptos. Interesting. Cryptopractor, like chiropractor. Thank you so much for coming. First of all, let's dispel some FUD here, and it's nice to have a different question. A report from Blockworks in May 2024 reported that 92% of failed transactions were from bots. Okay, these are traders who make over 5,000 transactions a day. Okay, and this definition captures the bot aspect. I haven't had a failed transaction on Solana since last year, and that was during a very congested trading period on Jupiter, and I had to put in twice or modify my slippage to get filled. But that has not happened since 2024. Bitquery also has an analysis, and they found that Solana processes at least 250,000 or more successful trades per hour. Okay, but the only ones that fail are from arbitrage bots. Okay, ARB bots. They fail them on purpose because they can't verify them, and they can decongest. And this also happens with Base too. The Base and Solana was in their report. They kind of find a way to block the ARB bots. And then the Solana community also added some feedback, and they acknowledged that 95% of failed transactions were due to bot activity, arbitrage attempts, okay? People trying to get ahead of the retail investor. So it's all bots that fail, not you, not your transaction at all. So don't worry about that FUD. People like to use that a lot. And as usual, FUD is great because it keeps prices low. We love FUD here on the channel. Keep it coming. Brumby, can't thank you enough for what you do for the community. I got into stocks only because of you. Woohoo! By the way, I love stocks. It's made a huge difference in my life as well. Anyway, and options. Now, I started with options as well. I prefer leaps mainly. Good job. You sell short-term stuff, you buy long-term stuff. Tesla, NVIDIA, and MicroStrategy. Nice. I recently have been approved with margin facility. What is the best way to use this? Well, let's talk about margin. Margin has two big advantages that I personally use. You can use margin to buy more shares if you want. And these are some of the strategic opportunities that I like since your margin improved. I love selling puts because it unlocks so many more strategies. In the past, you had to be cash secured. You needed cash in your account to sell a put. But now with margin, you keep 100% of the cash in your account, and you can use that to buy leaps. And with margin, you can now sell naked puts with less than full cash collateral. But of course, more risk. Don't sell a put on things that are going to go down, everybody. Very important. Also, you get a lot more capital efficiency. Selling puts on margin means your capital is freed up to be used somewhere else. For example, leaps. And this increases leverage. But remember, Very important. Use margin wisely. It's a double-edged sword. If you use margin to buy something that goes to zero, you can be reckless and it can result in total account destruction. You can lose everything, okay? When I always have what I call a very thick mattress, extremely thick mattress. It's rare I dip into 10, 20% of my margin, unless it's a violent bottom of a market, black swan event, whatever. Then I just tap that and just go whole hog. But I always have lots of safety margin. I am never, ever exposed to getting wrecked, even with my very high concentration portfolios. Never. And I do that on purpose. So always know your buying power, always know your maintenance requirement, and always your max loss in any trade. Never expose your account, never expose your margin. Use it as a tool and only sell puts and things that are going up, not down. Okay, hope that helps. And this week, there's a cool thing. Well, it shouldn't really happen in the first place, but due to deforestation, sloths are forced to attempt to cross roads, and they use power lines, which can result in devastation. So we have funded some sloth speedways, which is such a cool idea, which are bridges that help them cross roads and stuff and rainforests, and gives them a reliable route to the treetops, which is awesome. And they're trying to get to 8,000, and we help them get there a good part of the way. Tomorrow, DCA, a good part of the way with the whole gang. So I look forward to seeing them. And don't forget to hit the like and subscribe. I'm going to do live questions now with everybody. This was Financial Jiu-Jitsu. And thank you all for coming. Thank you once again to the mods in the chat. And everybody behind me. It's not just me. There's a lot of people behind the curtain. And justice for all. First question. Getting into the question is, my father-in-law is interested in Bitcoin. What is the best on-ramp with a 10-year time horizon for someone that age 60, strategy, portfolio, allocation, lowest risk? So there's a couple of aspects, I think, to this question. What is the best on-ramp? Mentioned interested in Bitcoin. If I was 60, I'd just buy IBIT or FBTC. I'd buy the ETF in a brokerage account. I wouldn't mess with self-storage, cold storage, any of that stuff. Too risky. I would not buy anything on Coinbase or Kraken or anything. It's just too risky. Just buy the ETF, low risk. And then in terms of, you mentioned strategy, portfolio allocation, lowest risk. As you know, I share my portfolio every single week, all the changes. Even at that age, I still have a big slug into AI, NVIDIA, Tesla, whatever AI you want, but pick the winning names that are going to really change things up. It's not hard to find what they are. And then a little bit of Bitcoin, but I would be very hesitant buying Bitcoin at $105,200. Very hesitant. Yeah, we might go to 120, maybe 130, maybe 150, maybe 175. But the odds of going that high are far less. Keep some cash. Remember, we're deep. We're 80% into the bull market run for Bitcoin. There may be no bear market ever again. It might just keep going up forever. We don't know. But I'd be very cautious here. But we do know AI is going to explode, and it's going to be fantastic. So make sure he has good exposure to that too. Dabble, get a little bit of IBIT or FBTC, maybe a tiny little position in the leading L1. And then the rest, AI, and maybe some other interesting stuff too. As you know the things I play. Doc Intern, thank you so much for coming. Love you too. Doc Intern is planning to use the rotation model in my retirement account, but ethical issues with Palantir in addition to Microstrategy, Tesla, HIMS. What are some uncorrelated assets you'll be recommended for that? So yeah, there's a whole bunch. Let me pull up the list actually, because I do have a list of some of the names that, and we will. So what I've done is I've created a model now that helps me find all the high Sortino ratios. I'll share that in Patreon real soon. But some of the names that I did find to work very effectively. Let me make sure I get the names. Bear with me. Yeah. IBIT, Palo Alto Networks, Tesla, Netflix, AMD, Robinhood, Visa, MasterCard, Now, which is ServiceNow, HIMS, did I say NVIDIA? NVIDIA. Those types of names are some of the ones. We'll have a much more detailed list, and we'll have a monster back test community list too as well that you can share. And again, always try and project forward where things are going next. Very important. Think macro lens, next 2 years, what's going to be hot, what's not going to be hot, and then position accordingly, allocate accordingly, tweak accordingly, and run your own projections. That's going to be absolutely magical. So again, I just say it is a little bit like flying a 747. So give it that respect. Don't just jump in and just hit the start button and go. No, take your time, dial it in, watch the back test. Charles Kim, I just want to say thank you, James. You and your team are the best. Woo! Thank you, Charles Kim, for being here. I call you SUGDIV, the Singapore Dividend, SGDIV. Are you concerned about the government nationalizing institutional BTC? I am concerned about the ability for the government to be able to do this much easier than from an individual in a manufactured crisis. There's so many concerns with Bitcoin concentration, Bitcoin scarcity, government owning Bitcoin, paper Bitcoin, lending Bitcoin, community developers changing the code base, quantum. I mean, the risk of the list of risks is to the moon. All right. When I compare like Bitcoin to Tesla, it's like Tesla's safer. But the wild card that Bitcoin has is scarcity. If a supply crunch kicks in, it's going to be fantastic. That's the game. Since 2017, scarcity has been the game for me. All the other risks, allocate an expected probability. Everything I do an EV, expected value calculation. If the odds of the government messing up Bitcoin or owning too much of it is 1%, don't worry about it too much. Or a bad hard fork, double spend problem. Add them all up together, allocate a percentage, then allocate the future price prediction that none of this happens as well, and then you get your result. The risk reward is still very, very, very good. There are tons of risks. I could spend the whole day talking about the Bitcoin risks. But again, there's risks everything. If you don't like risk, just stick fiat in your mattress. But that's not the game we play here. So that's not owning fiat or treasuries or bonds or any of that garbage will not help you escape the metrics. You're just going to drown. You're not making 14% per year. You are drowning, ladies and gentlemen. Remember that. Your bag needs to be going up 14%. Also, 2,000% is nice as well. And thank you for your super sticker. Max Grease, Nick M, French Dreamer, Sir Winston, Adam Q, Anjo, Redrich, Signal 103, Mary G, Dog One, Hudson the Dog, 2 dogs, cool. And shout out to the Beagles who became free yesterday. Great news. Crypto last ad post, chiropractor, and synthetic dividend. I like that. Synthetic dividend. Selling calls is a synthetic dividend too. I like it. And LAX guy, 99% coins are going to zero. This is very true. Actually, you could probably say more, 99.5% now too. And it's great to see people with their flags from all over the world. Shout out to Australia as well from Ivar. Or no, that's Norway. I think this flag is so small I can hardly see. I think it's Norway. Ivar. Ivar, man's a real Viking right there. Thank you all for coming. Thank you to the mods in the chat. Hope you enjoyed the show. See you all tomorrow. DCA. Bye.